Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
It's always a pleasure.
Hilliard, how crazy is the stock market right now?
Well, it's hard to believe. Obviously I lived through 1999, 2000, and that's the only comparable to this. It's just, for instance, the stock we actually were lucky enough to buy in June has now tripled, and it's one of those renewable energy stocks, but they're doing extremely well. But a company called QuantumScape that is maybe going to come out with a solid-state battery that could be used in cars. It has some advantages over the lithium-ion batteries that are using now, but they're not. The first possible chance they'll have is 2027. It's up 5-fold since November 1st, so what's that, 7 weeks ago. So, but the thing is, that's almost become normal for people. People are starting to expect that, right? So there's no, and of course, if people are trading on momentum, then they don't see anything wrong with buying a stock after it goes up 5-fold. But as a value investor, it's extremely difficult to get your head around doing that. So the value investors are being left behind, and the momentum investors are doing great. And how long will it last? Nobody knows.
Now, how do you invest in a market where half the people I talk to say, oh, it's too frothy, it's too high, it's time to sell and get the hell out, and others are saying, no, there's still lots of room for growth, get the hell in?
It's because it's not and I remember this in 1999, 2000 was the same, there were segments of the market that were doing very poorly, like in the case of Canada, the oil and gas sector is down about 40%. It was down more than that earlier. It's rebounded a little bit, but still down 30-40% from the start of the year. To the renewable energy sector, which a few weeks ago was up 80% year to date. So it's like it isn't just the market. It's which sector do you get into?
In England, you're saying Brexit, their deadline for an orderly disappearance from the European Common Market is due to expire in 2 weeks. What's that doing to the stock market there?
Well, the stock market's almost never been cheaper so you got the market in the U.S. has never been this expensive, and then in the United Kingdom you got a stock market that's almost never been cheaper. So, and it isn't just Brexit, it's and the risk of a no-deal Brexit, which is pretty high right now. But it's also the type of stocks they've got. So they've got a really bad mix of stocks over there. They've got some of their biggest companies are oil companies like British Petroleum, and then some of the big international banks like HSBC. And those are really priced at the lowest of the value investing range. And they don't have very many Googles or any of those kind of Facebooks or anything like that. So there's pockets of value in the world, but generally the markets all over the world are expensive.
So is this really a time to maybe sell stock and sit back and see how it shakes out?
Well, so we never go all out of the stock market. It's imagine if somebody got all out of the stock market in March because of the COVID, and it turned out that COVID is going to be with us quite a bit longer than we thought in March. A lot of people were thinking about getting out of the market entirely. Yeah, they would have missed out on some fantastic gains, depending on which segment of the market they were in. So you never want to go all out of it, but we are definitely counseling people to reduce their risk and take some risk off the table, and not to get out altogether. And certainly, if you got some good companies that are doing well, don't sell them entirely, but scale back the risk level, because there will be a correction. I mean, this is sort of like the third or fourth biggest stock market bubble in the last 100 years. So yeah, there's always a correction after that.
We'll have more with Hilliard MacBeth right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, some are saying Canadian real estate prices are going to go up 5, maybe 10% in some markets, but you're saying not everybody is painting a rosy picture for the new year.
Yeah, so the Royal Bank of Canada, which is the largest retail bank in Canada, largest bank in Canada, sort of TD and Royal are kind of 1 and 2. They actually have a pessimistic scenario where they've got house prices going down 30%. As the worst case scenario, and probably their best case scenario is 5% increase or something like that. So they're starting to recognize that there could be some weakness in the housing market. But the big issue in the housing market with COVID has been the people fleeing from the condo in the center of places like Toronto and maybe Vancouver, Calgary, and Edmonton into the outskirts of the cities or right out into the country and getting a single family home with a yard and all that sort of stuff. So there's been quite a bit going on under the surface of sort of like small increase, small decrease kind of thing. And people have asked me, are the two markets separate? Can they be detached? Can the condo market go down 30% and the housing market go up 30%, which is what some people are predicting? But it doesn't work that way because mostly people want to live in a place because they've got a job somewhere. And if condos get extremely cheap, then they will. They might not buy them, but they'll rent them as an alternative to having to pay ridiculously high prices for single-family homes. So the two are definitely connected. And then think about the people that want to get out of condos and would like to move up to a house, but they can't sell their condo. So up until now, it looks like the lenders have been willing to finance the new purchase before they sell the old purchase. But in any kind of a financial crisis kind of scenario, that wouldn't be possible anymore. The lenders wouldn't go for that. So sometimes people, they have to sell in order to buy, and that in a difficult market could be what holds the market back. So, but in the end, it's a housing bubble, and the prices are extremely high, and we will see the prices get back to affordable at some point.
What happens when companies say you're no longer going to work at home, you have to come back and work in the office? Or is that a trend that won't happen?
I don't know if they're going to say that because, I guess if they've got the office space and they committed to it for 10 years or something like that, and they would like to fill it up, but I think a lot of people, if the productivity is there and people are getting their work done, they probably aren't going to put too much pressure on them. Say you have to sit here, you have to sit there, you can sit at home. Some people can't work at home. I mean, if you've got young kids, I talked to one mother recently, and she's got a 3-year-old, and she's lucky if she gets 10 minutes before he wants some of her attention. So she basically can't work at home. So other people can work at home. So I think corporate companies will have to be flexible. And certainly I'm planning to work at home for the duration, and even after the vaccine comes, I'm pretty sure I'll keep working at home, maybe going just for meetings and stuff like that. So it's I remember thinking for years now, it's sort of crazy that we all get in the car at 7:30 and drive for an hour and then work from 8:30 till 5 and then drive an hour home, and all the associated costs involved with that, parking and everything, and pollution and traffic jams. I mean, it seems really, when you look at it now, when people find out how easy it is to actually get set up and work in a different place, I think corporations are worried about supervision and loss of productivity and that sort of thing, but I haven't heard that that's been a big problem so far.
Well, I saw a survey that said since people started working from home in Canada and U.S., productivity is up. In Italy, when they started working from home, there was no change. Maybe there's a different attitude about working at home.
One of the things about Europe, in my research for my book, was that they have so much less space than we do. So in Canada and the U.S. and Australia, the three biggest, the number of, they did it in meters, over 70 square meters per person in living space. And I think Australia is the highest, at the high end of that. And in Europe, it's like, now this was 5 years ago, but it was between 20 and 30 square meters per person. So it's basically, we have triple the space. So it might not be possible for them to work at home in countries like Italy and Spain and France and Germany, because there are just too many people. The whole population of Germany, for example, 83 million people, could fit into less than half the size of Alberta, the province of Alberta. So Alberta has 4 or 5 million people. We could easily handle 80 million people without really, and we still wouldn't be anywhere near the density that Germany has. So it's a different world.
We'll have more with Hilliard MacBeth right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, what big issue do you think is going to stand out if and when the next federal election is called?
Well, the late on a Friday night, is trying to hide it under the radar. The federal government came out with their carbon pollution pricing plan, and they said that they were going to increase the price of carbon $10 every year until it hits $50 in 2022. And this will, according to their projections, allow them to meet their targets by 2030. And they eventually get to net zero emissions by 2050. So a bunch of countries around the world, Europe has got a very aggressive plan. China just announced recently, in the last couple of months, a very aggressive plan, although they're using 2060. And Joe Biden in his campaign was talking a very aggressive clean energy plan, but he doesn't get sworn in until January 20th, so we'll see. But Canada doesn't want to be left out. So now this is the minimum that the federal government is setting. And the price will go up. And right now, I think most of the provinces, maybe except for Alberta, have got a carbon tax that is above the federal minimum. But the increases of $10 per year until it reaches a pretty high level are probably going to put a lot of pressure on. So that'll be an issue in the election. If the election comes in the spring, which is increasingly the rumor, the handling of clean energy will be a big feature in that election.
Well, Chris Sims from the Canadian Taxpayers Federation said if they implement this clean fuel standard, in other words, a new carbon tax on top of the current carbon tax, to fill up an SUV could be $80 to $100 extra on top of what you pay today.
So what they said in their release was that I think every $10 carbon tax at the pump is like 4 cents per liter or something like that. So that of course, there's a lot of liters that go into an SUV, right? So, but yeah, I mean, there are. The European standards are a lot more aggressive than what Canada just put in. And then basically in Europe, you couldn't drive an SUV in Europe. I think it would be impossible to do it. And several countries in Europe have said that they're going to ban gasoline or diesel-powered vehicles altogether within 10 or 15 years. So it's Canada's, although maybe to Albertans and some other people, these standards sound pretty aggressive. They're actually basically probably quite a ways behind some of the other countries that we're competing with. And so we'll see what happens. If they fight an election on it and they win the election, then they'll probably go ahead with it. And I don't suppose they're going to get a lot of votes in Alberta anyway, so maybe they don't care.
Well, I'm just thinking, though, it's not just the cost of transportation, as Paul Landry used to say from the BC Trucking Association. Everything in your house at one point was in a truck. That includes your food, your clothing, your furniture, everything that you use. So just to move things around. And what about, will farmers get a break? Or will they have to pay this high tax?
Yeah, I don't know the answer to that, but I know that they are going to have a rebate. So they talked about a number, something like $3,000 per family of four. So some people will actually make money if they drive an electric car and their heating costs for the home are fairly minimal. They'll actually pay less than what they get back from the government, and the government, of course, is going to send them that check. So the government's going to make it look like they're doing them this big favor, and so it's they must feel like there's quite a bit of support for this for them to take this chance in the front of what's probably an election coming in less than 6 months.
Hilliard, taking all this information into mind now, putting on your investment advisor cap, what are you telling your clients? Well, we've been watching this run up in the stock market, and of course before that the housing market in Canada, and we think it's a really good time to be cautious, to be careful. If people have too much debt, I would encourage them to make sure they get out of debt. And if people are too heavily involved in the stock market, it's a really good time to scale back that involvement, because we never talked about going right to zero. So people should always keep a balanced portfolio, but lower the risk all across the board, because we're definitely overdue for a fairly significant correction. I thought in March that we were having it, the market went down 37% in 1 month, and but the flood of money that the government put out basically reversed that, and now we're back to levels like we were in February before the correction, or even higher. So, but we don't think that that's likely to continue. When you look at the debt levels in Canada, whether you take the federal government, the provincial government, the household debt, and the corporate debt, we're right in the top four in the world. Japan, Belgium, for some reason, Canada, and one other European country are right up there with us. And these are levels that have never been seen before. And the only time levels like that were ever seen, similar levels, not this high, but similar to this, there's been a financial crisis that followed after it. So people would be wise to basically reduce their debt exposure, get their risk levels down, and get ready. Hilliard, thank you so much for chatting with us.
Thank you very much.
My guest has been Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethmcleodgroup.com. Find him on Twitter at HMACB. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter at HouseStreet. I'm Jim Goddard. Thanks for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.